China and the U.S. going to be holding the third round of talks this week in D.C. In fact, today is the start of the strategic and economic dialogue. Our next guest has a definite idea of what should be on the agenda. Derek Scissors is with us now. He is the Asia economist for the Heritage Foundation. He's joining us from Washington. Derek, good to see you. What is the #1 hope for this meeting? What issue or issues are the two countries most likely to agree on?
They're most likely to agree that they should have another meeting. What they're going to talk about on the U.S. side, at least, is market access. There are a set of market access issues. They're a bit in the weeds. I don't think we're going to get much in the way of important agreements. Certainly, there'll be a lot of agreements announced. What I'd like to see, and I think a lot of people outside the administration would like to see, would be focus on some of the big issues confronting U.S. and China economies. One, rebalancing, subsidies for state-owned enterprises. There are big issues we're facing. Looks like the SNED is going to be focused on a number of little issues.
Derek, before we go on to these bigger picture issues, I want to ask you about the U.S. pushing for greater market access in China. Do you think that even though the U.S. obviously has its own interests in mind, that this could help China control inflation at home?
Well, I mean, there are gains to the Chinese. I hope the United States, and I don't think we are, is going into the discussion saying, hey, do this, it's going to help you, because that never works. You don't tell the other side what their interests are. There would be gains for the Chinese, but this Chinese government has shown that it's really interested in control over its economy. And when you let foreigners in, no matter what the benefits they bring, you lose some of that control. So they're unlikely to listen in a serious way.
We know, Derek, that the Treasury Secretary, Tim Geithner, said he's going to urge China to allow higher interest rates versus a higher exchange rate. Is that the right tack to take at this point?
I think it is, and I think this is potentially, depending on how it plays out, an important change. And the U.S. has been yelling about the exchange rate for a long time. We never seem to get what we want. The exchange rate is climbing. The yuan is climbing against the dollar, but it's not climbing as fast as we want it to. This might be a more productive tack to take, talking about Chinese interest rates, moving the focus away from the exchange rate. We want the same thing. We want liberalization. We want more market prices. We haven't been able to get what we want on the exchange rate. Maybe the Chinese will prove more open to our suggestions on the interest rate.
Now, you mentioned some of the bigger issues, rebalancing among them. I mean, arguably, the U.S. saves too little and China saves too much. Is this really going to change, though, until China institutes something that's just broad institutional change, such as a Social Security program?
Now, you have it right. The Chinese need to make big changes to move away from saving too much, investing too much, producing too much. They have way too much overcapacity. We also have to make some big changes. We have to change the way our budget looks in this country. The thing is that it's much easier to do this when you're doing it together. These are very difficult, painful steps. The world's two largest economies. It's exactly what the SNED should be talking about, coordinating those sweeping institutional changes that are difficult, but that both sides recognize they need to make.
Derek, I mean, you follow, obviously, China very closely. You're right in D.C. Do you think that the tone has gotten better? As you said, I mean, everything's easier if both sides want to work together. Has the tone between the two nations improved in the past few years, or is it just the same as it's always been and one that seems at least to be guided by a bit of mistrust?
Well, I think the tone's better right now, but I think that's a little misleading. Right now, there are no elections pending. 2012, we're going to have a congressional election. Last year, when we had a congressional election, things got a little bit ugly. We're also going to have a presidential election, and we're going to have the Communist Party transition in China. So right now, the tone seems okay, and everybody's sort of satisfied. Next year is going to be very difficult. This is the time, if we're going to make progress with the Chinese, we have to make it this year, now, really almost in the next couple of days.
Derek, thanks very much for joining us with just a few of what is ahead for the governments of the U.S. and China as they sit down together. Derek Scissors is the Asia economist for the Heritage Foundation. He just joined us there from Washington, D.C.